Welcome in, you're listening to the weekend edition of the Korelin Economics Report, where this entire program is being recorded at the Cambridge House World Investment Conference. I have John Proust with me right now. John is the Chief Executive Officer of New Zealand Energy. We talked about New Zealand Energy on the show last week with Rylin Bailey. At that time, I announced that 3 days after the show aired, I was going to increase my position in New Zealand Energy. I did that last Wednesday. That's my story, and I'm sticking to it. These guys are doing everything right, in my opinion. John, you're back from New Zealand. You got a new acquisition. Let's get an update from you.
Absolutely. Thanks, Sal. Thanks for speaking to me today. We're very excited about the acquisition that we have made now. This is an acquisition that has two pieces. It has an upstream component, and by that I mean additional petroleum licenses that we've acquired.
Okay.
And the second part of it is a midstream acquisition. And the midstream is the facilities that are the central hub in the region for processing the oil, natural gas, stripping out the gas liquids, and also handling water.
Okay.
So two very important aspects. The lands I've been coveting for probably 18 months or more now.
And now you got them?
And now we got them. And it was based on the substantial seismic database that we acquired some time ago when we acquired our technical team. So we had an enormous technical database, and we started evaluating all the land around us to find the true quality. This land is important because the vendor had been producing oil from a deep formation, and they'd had IP rates of up to 5,000 barrels a day of oil, very high quality oil. And the formation had been depleted over many, many years. And just as I've seen in a number of basins around the world, we had identified through our seismic substantial uphole opportunities, so shallower formations in the Uranui, the Mount Messenger, and the Moki.
Okay.
And so those shallow formations are quite prolific over all these 4 petroleum licenses. Now, what adds to that is they have 27 wells currently dotted around the licenses.
Right.
And those 27 wells provide us an opportunity, a free look-see at those shallow formations by looking at the logs, which we've now acquired. So what that does for us is it means we don't have to drill the wells, we don't have to complete the wells and case them. We can now plug the existing wells and then come uphole and use a service rig that will basically complete in the shallower formation that we'd like to see. So
basically the potential for significantly more production, increased production, I guess, is a better way to put it, is really there, definitely.
That's absolutely true, absolutely true.
Let me go back to the Moki situation now. Copper Moki 1, Copper Moki 2 are both in production right now.
Correct, yes they are.
3 and 4, we were chatting with Rylin yesterday, they're close, is that correct?
Well, Copper Moki 3 was a success also in the Mount Messenger, and we've gone through the initial production testing.
Okay.
We tested just over 510 barrels a day.
Okay.
And now we're going through what's called a pressure buildup. So you shut it in, you let it build up the pressure for about 3 weeks, 2 to 3 weeks. By the end of June, we'll be back on it, and it'll be a producer to add to our current complement.
Let's do this. Let's talk a little bit, and this is a forward-looking statement, no question about it. Remember, in our industry, nothing is guaranteed, okay? Conceivably, where could you be in terms of production, John, at the end of 2012 and at the end of 2013, only taking in consideration the properties that you currently have?
All right, well, certainly, Al, we've talked about an exit rate for 2012, and our exit rate for 2012 is 3,000 BOE a day. And we haven't changed our guidance yet because we're, A, continuing to analyze what we've got now, but B, we're really trying to figure out how we're going to digest this new acquisition and what it means in terms of us accelerating our program. Now, for 2013, we think that number is going to increase. And we have not really forecast 2013 yet, with the exception of saying that we're looking at a substantial increase in both oil and gas and liquid sales.
Okay.
What that means for us, and this is the important part that brings this all together, is that the midstream, the facilities that we've just acquired, very, very significant facilities. We've guesstimated that the replacement value, which is an important aspect of the facilities and the pipelines, over $100 million to replace those. and they allow us to not only bring our hydrocarbons to market, but also to bring others' hydrocarbons to market as well. So we've got the ability to sort of be a tolling facility as well as our own facility.
Now, when you use the word market, what I think is really interesting about the situation, John, that you have is that I know that there are no specific production facilities in New Zealand, and so the oil basically, the asset that you basically have leaves the country and then gets re-imported into the country. But the majority, correct me if I'm wrong, the majority of your demand and of your sales is all taken care of right there in New Zealand.
That's correct.
Right.
So basically what we do is we transport our oil to Shell's facility that's about 45 kilometers away from our Kapamoki location, and about the same distance, just a little shorter, from the Waihapa, the new Midstream facility that we've just acquired. So the Waihapa facility has a oil sales pipeline, an 8-inch pipeline that runs right from the facility at Waihapa right through to Shell's tank farm. And so your oil gets to market directly, and that means, and once it gets there, that's when they book the sales. So that's how you determine your cash flow and what you're generating there.
Now, you guys just came out, your latest financial statements just came out recently. The income statement's looking pretty good, if I'm not mistaken. I mean, you know, it's all working, man.
It's all working. You know, this is a cash flow story. And
exactly.
So it's amazing because in a real short period of time, in 2 years, we've been able to put the building blocks of the land, the properties, and the right properties, the quality properties, the people, the technical team with the in-depth knowledge of the whole country in this, and now the midstream together that's going to get all of our hydrocarbons to market. And so for us now, it's all about drilling and repeatability and adding to that cash flow base. So we had a $4.5 million net cash flow in the first quarter. Our average sale price per barrel was $117 a barrel, and we had net backs of over $90 US net back per barrel.
What's wrong with that picture? Nothing.
Nothing's wrong with that.
No, absolutely. You know, what I find to be interesting here is that in a very, very challenging, for lack of better terms, resource market, you guys are, I mean, you personally are repeating the successes that you've had in the past. You know how to do it right.
Yeah. We've assembled a great team.
Right.
People that have done it before, and have done it before in challenging markets. We can't reflect, or we can't forget the fact that oil has come down, and so oil is coming under, Brent pricing has come under $100,
right.
which is a real decline.
Yeah.
But with our sales prices being in Brent, and us getting a premium relative to the paraffin that's there, and also the netbacks that we're getting netbacks that are still substantially higher than the rest of the world. And
wow,
that's in a safe political jurisdiction is something that we're just thrilled about.
Really interesting where this company could go, and I really want to suggest keep on top of what's going on with New Zealand Energy. Okay, having said that, disclaimer, we got to do this all the time. I am a shareholder. I'm buying more stock. I purchased more stock this past week in New Zealand Energy. New Zealand Energy is also a sponsor on our website, so I am far from being arm's length in this situation. Having said that, remember, this is not investment advice. This is simply Big Al telling you what he is doing. It's worked so far very well, and I have to tell you, I'm very, very proud to be associated with John Proust, Rylin Bailey, and the folks at New Zealand Energy. John, thanks so much, buddy.
Al, thank you. Thanks for having me today.